Hi, this is Brian Dolan from the law firm Pepper Hamilton. Pepper has been a sponsor of the New England Venture Summit since its inception over 11 years ago. The 2017 summit took place in early December, and Pepper partner Steve London moderated 2 VC panels over the course of the summit. Pepper had a nice team for the conference over the 2 days, and we are joined by most of them here for this podcast. Joining me today are Pepper attorneys Steve London, Nick Stawaz, Shirley Coleman, and Dan Seek. Steve, with your moderating role, let's start with you. In addition to being one of the leaders of the Boston office, you're also a key member of our emerging growth practice, which works with startups and early stage companies. Working with these types of companies and VCs on a regular basis allows you to bring a unique perspective to the panels you moderated. Can you let our audience know the VC panels that you were on and any insights you can share with our listeners?
Sure, Brian. Thank you. I moderated 2 different panels. The first panel was during the coaching day of the New England Venture Summit. And that panel was entitled, Getting Your Company Funded. That panel was composed of traditional seed and Series A venture capital funds, corporate and strategic investors, as well as angel investors. The group of investors had a focus on a spectrum of industries, including life sciences, technology, cybersecurity, IT, fintech, internet, clean tech, and on. The other panel that I moderated was the opening plenary session that was entitled The Changing Venture World, What Can We Expect for the Next 24 Months? We had a similar cross-section of investors as in the coaching session panel, but we also included in this panel several VCs who invest at a little bit later stage. I might share with you 2 of the themes that emerged from the panels. Clearly, the sectors that are going to get a lot of attention from these sources of capital in the next year or 2 will be artificial intelligence. There's a lot of interest in blockchain technology. There's also a lot of interest in digital health or healthcare IT. Life sciences will continue to get attention from the investors, including biotech, drug development, and med devices. And strategics will continue to focus on those technologies that feed their development pipeline. One other theme that I'd share is that in both panels, there was clearly a consensus on the various factors that these sources of capital need in order to make a positive investment decision. The management team is critical. The founders and the others working with the founders must be able to command the knowledge of their area. The sector that they focus on is critical. VCs will only invest in those sectors on which they focus. The investors also want a market that's large enough to provide the growth opportunity for the returns that they expect to provide their investors. And they want to see customer acceptance, some evidence that product or service is going to be accepted by the customer. And then lastly, everyone is focused on capital efficiency. Investments that require less capital are going to be easier to make those decisions than the capital-intense businesses. Most of these sources of capital all indicated they have sufficient funds to continue investing in 2018 and 2019 in the same manner that they have done historically. So those are just a few of the themes that came out of the 2 panels that I moderated.
Now, I wanted to talk about the mood and energy of the conference this year. Dan, I saw you talking to a ton of companies and investors over the course of the summit. Can you start off with us and let us know what you were feeling?
Sure, yeah. I mean, I think the overall mood was pretty optimistic. There seems to be a good sense among the deal community that a lot of deals are still going to be done and a lot of positive energy remains in the market. I think it's always kind of interesting at these conferences. You get up close and personal with a lot of the most interesting and promising technologies, and especially at the Venture Summit with the high presence of VCs, you really get a sense of what the VC community sees as the most promising new technologies that are coming out. And of course, we see all of the players that you would expect to see in the market, but this time one of the new ideas that was present at the summit that I haven't seen in the past was the concept of blockchain and token sales and coin offerings. For those of you who are unfamiliar with the blockchain, generally, the term blockchain refers to a method of storing information across a network rather than in one central repository. So this allows for transactions to occur between the nodes of a blockchain that are then verified by consensus rather than a third party needing to come in and verify them. So this concept, this method of computing, has a lot of potential applications in a host of different areas, and that's something that we were really starting to see VC interest in at the summit for the first time in recent recollection. So the summit was coming at a time when there was really a lot of interest just generally worldwide in what are considered token sales, and these are sales of a virtual representation of value that may or may not be securities, and a lot of debate going on right now about whether that is or is not a security. But it was kind of interesting to hear a number of VCs talking about this type of financing model, which has the possibility of producing non-dilutive financing for the company that's issuing the tokens. Interesting to hear from the VCs themselves as to whether or not they thought that was a viable model. The opinions of folks on that topic was pretty varied. You had some that were 100% in, some that were 100% out, and then there were a number that were sort of in the middle. So that was a really interesting and new addition to the conference. It wasn't so much that there were many companies out there applying the technology. I think the technology itself is really still in its infancy, and commercial applications don't really exist just yet. But it was definitely a new concept, and one that was on the minds of a lot of people that I talked with.
Yeah, it seems like blockchain is a buzzword that is working into every conference that Pepper has been at in almost every industry, and every industry has an application, including, we saw that you were just quoted yesterday in Reuters on how energy markets are trying to get involved in blockchain. So I think we're going to hear that a lot in 2018. Pepper also hosted a private dinner of 30-plus VCs the night before the summit. Shirley, let's turn to you. Can you share any conversations you had that night with some of the VCs you were with?
Sure. So first of all, it was a really nice event. That particular night, it was pouring rain, and so it was a nice surprise to see the room packed. I talked to a number of different investors at the dinner, and one of the things I heard from a few different conversations was an increased focus on research-driven investing. In other words, investors, rather than identifying a space that they are initially focused on, allowing their research into developing trends. For example, Steve mentioning artificial intelligence, kind of driving their investment focus and the companies in which they're investing. Another theme that I heard from a few different sources was venture capital firms who had been focused in later stage life science investing, continuing to move to earlier stage investment, with a thought process being that a later investment is almost too late in some of these technologies and in some of these settings. The trend of earlier stage investing by funds who had traditionally been focused on later stage pharma companies, later stage biotech, was of interest to me.
Let me add a couple of other thoughts that came out of the VC dinner. And this is an idea that entrepreneurs often fail to appreciate, and that is many venture funds are in competition with each other. and they are very, very concerned about missing an opportunity with a particular company. That next great deal, they are so concerned that another venture fund might scoop the deal from them. So one of the primary reasons that the venture funds come to a program like the New England Venture Summit is to make sure that they have a good understanding of the opportunities that are out there in the industries and sectors that they focus on. Another theme is that thorough due diligence prior to making an investment is absolutely essential in today's environment. Perhaps unlike the dot-com boom where the Silicon Valley investors were investing in a matter of a week or days with a term sheet, that's not the case even in a frothy venture investing environment that we have today. Everyone is doing thorough due diligence before they make their decisions.
Nick, how about you? Who were you meeting with, as you were walking both at our dinner from the VC world and also kind of working around the conference itself?
One notable aspect of the summit this year, I thought, was the increased presence of corporate VCs. And what was particularly noteworthy, I thought, was the range of industries that they're coming from. In addition to, life sciences, technology, and energy, where we've seen them before at the conference, now we were seeing them in other industries, from the food and beverage and from insurance. And I thought it was interesting to have increased presence from those investors. And I think from their perspective, obviously there's a financial interest that they have in these investments, but they're also looking for potential partners and the latest technology and ideas that could help further their own business. And so I think it's a great thing, certainly for companies, because it's another resource and source of capital.
One of the benefits of the Venture Summit is just the sheer number of exciting companies you get to interact with over 2 days. Can anyone share just some general themes they may have heard as they were walking the halls of the conference?
Well, one of the things, Brian, that I thought was very interesting in speaking to some of the companies who are in the process of fundraising was the notion that they weren't just looking for financing. Of course, that goes without saying, but they were really focused on finding the right source of financing for their stage of development, meaning the right type of investor in terms of the venture capital firms or strategic investors' expertise and ability to guide and kind of appropriately mentor the company and its founders. I think it also, finding the right type of financing also applies to the size and the terms of the financing. So I think that early stage companies and entrepreneurs are increasingly becoming more savvy about raising the amount of funds and the type of funds that they need to get to the next stage in their development, as opposed to simply seeking as much financing on whatever terms are available. So that was an interesting theme that came out in a number of our conversations with entrepreneurs.
To follow up on Shirley's comment, Brian, as you know, we've been involved with the New England Venture Summit for many years. And this year was consistent with a progression that we've seen over the prior several years, and that is the quality and sophistication of the entrepreneurs and the quality of their presentations continues to improve every year. We've seen that not only with the New England Venture Summit, but with other programs that showcase entrepreneurs and give them an opportunity to pitch their companies. the quality of entrepreneurship and their ability to convey their message is at a very high level now. So what does that mean to the entrepreneur? That's a very good thing, but it also sets a very high bar that sources of capital have come to expect a refined, well thought out, and sophisticated presentation about the opportunity that is being presented to them. I'd also like to share the kind of excitement and energy that is pervasive among the entrepreneurs at a program like this. That energy is invigorating and infectious. By definition, it's essential for an entrepreneur to be successful, is to have that unwavering drive and energy and optimism for success. And it is just an enjoyable environment to be part of. And we at Pepper Hamilton are just thrilled to be able to assist those kinds of entrepreneurs that share that excitement.
One thing that stood out to me, Brian, was while there certainly seemed to be a large number of sources of capital, it's that the competition for that capital is fierce. A lot of these investors seem to only do 1 or 2 deals a year, which I think for the companies puts the onus on them to really sharpen their pitches and to really be able to deliver a clear and concise and persuasive story of their company to attract these investors, because while they're out there and they're looking and eager to invest, many of them seem to be very selective in their deals.
Well, thanks, everyone. You've been making a lot of great points, I think, for our listeners. Before we cut this podcast short, anyone want to kind of just give a general takeaway they might have felt from their experience?
Brian, this is Nick. I'm happy to do that. I think one theme that I was hearing pretty consistently from the VCs is a big part of what they're investing in is the management team and the people behind the company. They want to partner with people who they get along with, enjoy being around, and generally like, because the expectation is they're going to be working together relatively closely for the foreseeable future. But I think it's important for the companies to recognize that that sort of relationship goes both ways. And while the competition for capital is fierce, I think companies need to be mindful of who their potential investors are, and they need to make sure that the investors are people that they enjoy being around with and that they see themselves being able to work productively with going forward. Because I think ultimately, if there is a strong and healthy relationship between the two, the company is in a much better position to succeed. If the relationship is difficult and the parties, or at least the management team, struggles to get along and work with their investors, I think it can really detract the company from achieving their goals, and ultimately plays a critical role in whether the company succeeds or fails.
Messages from the sources of capital, as well as conversations with entrepreneurs, suggest that entrepreneurs, although they know the statistics, often fail to appreciate just how many opportunities and pitches are presented to the sources of capital. Literally hundreds and hundreds a year are presented to each individual source of capital. And it is clearly frustrating to an entrepreneur that doesn't feel that their opportunity is appreciated by the venture fund. But again, they need to always remember that they are one of hundreds. And the challenge is to fully recognize how unique your opportunity must be and how you present it to the VC in order to grab their attention. And one of the most significant ways to do that, as I think Shirley mentioned earlier, is that you need to focus on those funds that are knowledgeable and have a historic track record of investing in your particular sector.
Well, thanks, everyone. That's all the time we have today. I really appreciate you spending a few minutes with our listeners. For our listeners, if you're interested in learning more about Pepper Hamilton's emerging growth practice, or our Pepper Seed program for startup companies, or our relationship with VCs, please visit Pepper's Insight Center at www.pepperlaw.com, where this podcast is posted, and we'll have more information off that page.